Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Charles Schwab and delighted to see so many of the usual suspects here today. If you are brand new, and I've seen a couple of handles that I haven't seen before, feel free to type a greeting into the chat so that we can officially welcome you into this community where we lock arms together every Wednesday to talk about trading price patterns. This is an intermediate level class in that I'm assuming you understand some basic stock investing strategies and some basic option strategies. We tend to move fairly quickly in this class. I also treat this as a companion class to the Monday and Friday trading a smaller account class. So what are we going to do today? Well, we're going to look at placing 4 different types of example trades on 3 different stocks. So we're going to look at a long call position with a target. We're going to look at a short put vertical, a long call vertical, and a long call with a 1 ATR target. We're going to look at a couple of stocks that I looked at that didn't quite meet the grade because I get asked often, how do you pick what examples you're going to show? And well, you kind of have to kiss a lot of frogs before you find the ones that potentially could be royalty or could be your prince, right? So I'm going to show you a few of the frogs that, kind of you kissed and kind of went, ugh, not yet. And then we've got 3 trades that we placed last week. And part of becoming a solid trader is not only knowing when to get in, which frogs to kiss, so to speak, but also knowing, when it's time to wave goodbye and show them out the door and then lock it, on the way out and either lock in a profit or recognize a loss. So we've got James Boyd with us in the chat. He's a great guy and an awesome coach. So if you've got any questions, he knows all these strategies inside and out. We've got some people here who are super new, and then some of the usual suspects like Will. We've got Moneymaker Aspiration. I love that handle. Who is a newbie? Life in the Fast Lane. Jay and Robert and Greg and the rest of the gang. So welcome to everyone. I'm so glad you're all here. Okay, if you're not following us on X, you are missing out. It is another free resource that you can take advantage of. My handle, Barb Armstrong CS, James Boyd CS. And man, James is a prodigious poster. You don't want to miss the stuff he's posting. So if you're not following him, get over there and fix that PDQ. Okay. Options, and we do trade a lot of options in this class. They do carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements in order to trade options with Schwab, and not all will qualify. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and to make sure that you have a trading plan, that you understand your trading plan, that you've practiced placing the mechanics of the trade, that you know when you're getting in and out and all of that great stuff. There are some nuances and differences. One is that short options can be assigned at any time from the time you place the trade until expiration. And that can happen in a live account. We don't ever see that happen in Paper Money. So that's something that we don't get to practice, but we do get to discuss it. Okay. Okay. So what are we going to do today? Well, we're going to go out and have a quick look at what's going on in the markets. And then we are going to, and then from there, we're going to get in, do some trade management, place some new trades, look at some of the trades that, we looked at and kind of went, not yet. So a little bit of everything. Okay, so let's come and start with the S&P. So there's been a lot of, talk in the press today about the S&P being close to a new all-time high. Well, my friends, it has happened. So today, this has hit a new, the S&P has hit a new all-time high. So there we go. I can take this line out. And so it's pretty hard to characterize this as anything other than bullish, correct? Correct. Now, we did have this period of pulling back in the period of December where we kept looking for the Santa rally. And, our pleas to Santa largely fell on deaf ears again this year. And we had a bit of a wedge pattern or pennant pattern setting up, and it has broken out to the upside. Okay, so hitting a new all-time high today. How about the NASDAQ? Well, the NASDAQ not quite at an all-time high, which is 22,133, but we're if you had a good arm, you could throw it and hit it from there. And again, December, we saw some pulling back, moving up to the upside again, pretty dramatically today, up 1.5%. How about the Dow? A similar story, right? Moving to the upside, we've had what, 1, 2, 3, 6 of the last 7 days have been up. And now, above the 10, above the 30, above the 100, above all the major moving indices. How about our small caps? Now, we don't tend to trade these as much, but a lot of people will look at this as a bellwether. Today pulling back a little, the only one of the 4 major indices doing that, it's down, 0.67%. So over 0.5%. But all in all, still in the last couple of weeks, it has been uptrending. And let's see if we were to draw, approaching, not quite through this diagonal resistance line. So we'll have to stay tuned on that. And then what about our volatility index? It's at 15. It's low. And it's interesting that this index is up a little bit. Now, could that be because it's earnings season and all of that? Maybe. But it's not that common to see this up at all when the major indices are all, rocking, except for the VIX. Now, if we come over and we look at sector strength, so we're going to come here to the S&P 500 sector indices. And if you are new, and I know we have a lot of new people today, and you're wondering how I got these columns, if you go to the playlist on the Trader Talks from Schwab Coaching, I have a bunch of mini sessions. And one of them is on how to customize a watch list. Another one is on how to customize charts. So we can see here over the last 3 months, consumer discretionary has been leading the S&P 500. That sector's been the strongest sector. Communications, a close second. And that one isn't quite at an all-time high, but it's within 2 points of it. So that's pretty strong. This, again, if you were a swing trader, you might look at that as an opportunity, or you might say, oh, I wished I'd, put that trade in, last week. How about financials? Financials have been really strong. That we're in the middle of earnings season. So we've seen a lot of companies like, Goldman Sachs, JP Morgan, contributing to the rise in this sector as they're posting some, pretty strong earnings reports. In technology, just off the podium, not in the medal round over the last 3 months, but, in a solid 4th place. And then in the last month, we've got energy making a bit of a comeback. But keep in mind that as much as it's really had a strong month, when we go back to the 3 months, it's in the bottom half. Or sorry, it's now worked its way up, actually, to 5th place. Okay. And industrials are all of a sudden rotating into favor. And then financials, which we've already talked about, utilities. Now, utilities getting hit today, but, the last week and a half has been pretty strong, hasn't it? And so, what does that tell us? It's that, we could potentially find opportunities in a lot of different places. Paul, it's interesting. Paul is asking the question, do you give more weight to 1 month or 3 months? And both of those kind of come into effect depending on what type of trade you are placing. And then I'd say if you look at this from a stock perspective, I'd give a fair amount of weight to both. And so I know that sounds like I'm hemming and hawing, but it just depends on the stock, on the index it's on, the sector it's in, and on the price pattern, which is what we're going to talk about. Okay, so let's go and look at a couple of different stocks. So, and I'm going to compress this. So here is Paychex. Now, Paychex, we had this diagonal resistance breakout, along with many other companies, from the middle of November right through the middle of January. This was pulling back, and then it broke out handily to the upside. And we've had a 3-day pullback. Now, this candle pattern, and we're going to talk about candle patterns, in the next couple of weeks in our Getting Started with Technical Analysis. But this candle pattern may indicate that this pullback is complete. But if we look at this and we say, if we're playing I Spy, what pattern do we see? Oops. Just erase that. Kind of a bull flag, isn't it? But with a bull flag, if we had a trading plan for that, what might it include? We want to enter the trade when we have a close above the high of the low day. Do we have that yet? We do not. And so what do? We take our right hand, our left hand, we sit on them and we wait. And so although this has potential, that potential hasn't given us an entry signal yet. And you may say, oh, well, but I think it's going to turn around. But do we trade what we think, or do we trade what we see? We're trading what we're seeing, and we're not seeing that entry yet. Now, some might say, I have a degree of confidence for whatever reason, news you've read, in addition to the technical analysis, that would be considered a more aggressive entry. So on that one, we are going to wait. Now, how about we look at Amazon? Been a lot of chit chat about Amazon in the press. Well, Amazon is a pretty big player in the market. It carries a lot of weight, and so it's something that's discussed a lot. Now, we've obviously talked about this, and we have a target from another class on this, based on this pennant or wedge pattern that it broke out of. And so might there still be an opportunity here? Yes, but when is earnings? February 6th. And so CB, on the last one, you'd get in when you have a close above the high of the low day. So let me just come back to Paychex for a minute. And so what would we be looking for? And we could put in a conditional order. So if we said this was the end of the day and here's our low day, we'd say, okay, here's our high of 146.43. We would like to place a trade if it goes above 146.43 by $1 or by 50 cents, whatever your trading plan would suggest, depending on what type of trade you're placing. So we'd be waiting for it to go above today's high, 146.43. So call it 147.43. That would be when we would consider, or some traders might place a trade today, and some traders might say, this doesn't look that interesting to me. Love is in the eye of the beholder, right? Okay, so when we come to Amazon, we've got earnings coming up on the 6th. And this has already had a fairly big move over the last 2 days. Does that mean it can't move anymore? It does not. And we may come back to this one, But if we're looking at earnings on the 6th and we come out to the trade tab, that's only 2 weeks away. And so looking at doing a long call vertical, and this is an expensive stock. If we were to buy a call, at the first strike in the money, that's a $10 option. We'd have to come all the way out here, for our trading a smaller account rules. We'd have to come out to the 245 or the 247.50 to meet our trade position sizing rules of not risking more than about $500 on any one trade. Okay. So let's come and look at one that has earnings a little further out. And if time permits, we may come back. So here is Marvell. And with Marvell Technology, so it's in the tech sector, has this been a strong stock? Like if we look at, this is just a 6-month chart, we've seen it go from 53 to 126. So it's more than double. So we definitely have a strong uptrend in place. Again, pennant patterns seem to be, the pattern du jour. And it's one of the reasons we talked about that and getting started with technical analysis yesterday, because we're seeing a lot of these patterns. And it broke out 2 trading days ago. So that was Friday, pulled back a little yesterday, and is moving again to the upside. So with Marvell, if we were bullish on this, we don't have earnings until March 6th. Could we do, and we could do any number of things. Could we buy the stock? Yes. And could we just do a buy and hold if you believe in this company and you may want to hold it for the longer term, or could we, if we wanted, depends on what your goals are. If you wanted to earn some income, could you do a long call vertical, or what we call a bull call spread? Others will call it a debit spread. I didn't come up with all these naming conventions. Don't shoot the messenger. I think of this as a long call vertical. And so if we come to Marvell and we say, okay, if we came out to February, we're giving it 30 days, and this has like $1 wide spreads. So it's at 125. And when we click on this and say we want to buy a vertical, it will default to the shortest distance or the smallest distance. Okay, so if we're bullish on this stock, this will cost us $45 to buy one contract. We can risk up to $500. So we could do 10 contracts. And how much does this have to go up to break even? It has to go up 7 cents for us to break even. It has to go up about 62 cents and then stay above 126 for us to ultimately see our max gain. So we're risking 45 for the potential to make 55. Now, our rule of thumb is that we're going for a 50% gain. 100% gain sounds delicious, doesn't it? But chances are, in order to realize that gain, we'd have to stay in this until very, very close to expiration. Where if we go for a more modest goal, it's possible that we could be out of this in a week. We could also lose all of this $45. And if we do 10 contracts, $450. But if we're bullish on this and we say, okay, we are going to do 10 contracts and we are going to take our 48, we're going to multiply that by 1.5. So 48 times 1.5, probably about 73 cents. Okay, 72 cents. We're going to right click, opposite order, say, hey, when this hits, oh, now it's 53. So that's going let me just say it's 79 cents. So when it gets to 79 cents, should have pulled the trigger a little faster. That's what I get for chatting. So we want to buy 10 at 53. And, when it goes up about 50%, we want to get out. If it goes down 50%, we're going to manually exit. Now, why are we not doing that? Why aren't we putting in an OCO order? And the reason is that sometimes in the after hours, the bid-ask spreads get wide. And then when the market first opens, there can be a lot of volatility. Now, if we get, if it hits our target and we end up out for a 50% gain, we're happy to do that. But we're not so happy if we get stopped out, and sometimes for much more than a 50% loss. And then when the market settles down, we wouldn't have been out at all. Okay. And so, what is the probability of this, going above 126? Well, if we look at this 126 strike, it's a 97%. This is the probability of it touching. So the probability of it touching is 97%. Now, just because it touches doesn't mean this is automatically going to be up 50%. We have a 47% chance of it being at 126 or higher. Now, that isn't taking what we're seeing from a technical analysis perspective. These are just probabilities based on this strike, this expiration date, and where the stock is currently trading. Okay, so we're going to look at this and say, okay, if we wanted to, and I'm going to take this line and repurpose it, we're going to make this 126. So if we wanted to be able to just come out and see on our chart, long call vertical, it's 125, 126, and it expires February 20th, I think it is. Excuse me. Okay, and we'll show that on the right. Now, in another class, we did a buy right on that with the goal of being called out. Excuse me for 1 second. Okay, so that's Marvell. Okay, so that's our first one. Okay, let's look at, so you can show your position. You can add that position on the chart. Let me just get rid of this buy right, which we didn't do in this class. I have it set up so that the default is that it will always show the price. Okay, and you can do that when you edit your properties. I've come here and the default is to not show the price. I made the default show price on the right and I saved it as a default. Okay. Yeah. Okay. So let's go on. Let's go on to AVGO. Okay, so with AVGO, we had this dramatic gap up on earnings, and sometimes things gap up and then they start to pull back. AVGO gapped up and then gapped up again, hit a new high of 251, and then, not surprisingly, it kind of consolidated for a couple of weeks. And so what we've seen in the last 2 or 3 trading days is it breaking out to the upside. But what we're also seeing, when you have this dark green candle, it means it opened higher and then closed lower, but still closed above the previous day's high. And we've seen that happen 1, 2, 3, 4, kind of 5 days in a row. And this candle pattern may be indicating that this run is getting a little tired. But you know what? We had a pattern like that this day and this day and this day, and it kept on going. So could we do a long call vertical? Yes. But if it pulls back, could we potentially sell something and do a short put vertical instead? Maybe around the 240 mark. And you might say, well, it's, trading at actually, we'd want it to kind of come down and be like, if our expectation is that, this old resistance is now going to act as support, we might, want it to be maybe if we sell a vertical, we'd want it to be 235, and my guesstimate here is 234.95, and we can easily adjust that. But could we get enough premium, for the juice to be worth the squeeze, for that risk to be worth it? Well, if we come out 30 days to February 21st, and we look at this 235 strike, we've got a 5-cent bid-ask spread. And one of our rules, if we look at our example trading plan, is that we want a stock that trades more than 1 million shares a day. So have we got that? Check. We're at 13 million shares, so we're good to go there. Do we have a tight bid-ask spread? Check. Do we have lots of open interest, at least 20 times the number of contracts we're planning to trade? Check. 3,000, we're probably going to do 1 or 2 contracts. So we're good to go on all of those things. So then what question remains is, are we getting enough premium for it to be worth our while? So we're going to come to our 235 and we're selling this vertical. And if we're willing to do a $5 wide spread at 235 and 230, we'd be paid $1.45. Now, how much are we risking? Well, we're risking $5 minus $1.45, or $3.55. And so our rule of thumb is that if we're risking $1.45, if we can make $1.45 and we're risking, 145 divided by 355, what's our potential return on risk? Well, it's 40%. And we're going to be in this trade for 30 days. So our kind of rule of thumb is, if we're in it for 30 days, we want at least a 30% return on our risk. And we've got that. Now, if we're risking 350, how many of these contracts can we afford to do? 1, because we're risking 355 for the opportunity to make 145. Okay. And so if we're good with that, and we're going to put this in our short put vertical group. Okay. And then how often are we going to check this in our long call vertical trades? We're going to check them every day. Okay. Oh, I put that in save. I didn't mean to do that. Let's come in, confirm and send. We're putting that in our short put vertical group. Sorry. There we go. Okay, fire in the hole. Okay, so now when we come to the monitor tab on these and we look at our long call verticals, this is how quickly we can do this. So just, to get rid of the distractions. Here's our long call verticals, and we want to get out when we're either up 50% or down 50%. Are we close to being down 50% on any of these? No. We did have a trade on Amazon, and that hit our target today. That's why that's showing as a 0. And when I looked at these earlier, all of these were up today. Now, the trade we just placed on Marvell is down a little bit. But we have 10 contracts, so those are down $5 a contract. So, we are good to go with those. Okay. So that's our first 2 trades. So Marvel, we did a long call vertical. Marvell and AVGO, we did a short put vertical. Let's come and look at Autodesk. And we're going to look at this one. And then we're going to look at a couple of the trades that we placed last week. So Autodesk, this stock, and this is only a 6-month chart, and it's gone from 223 to 326. So it really has been uptrending nicely. And then along with, so many others in the market, we saw this pullback through December and the beginning of January. But the last week, we've seen this diagonal resistance breakout. It broke out. It's like, was it a breakout or a fake out? Broke out, pulled back, and is moving again to the upside. And so if you're a stock trader, could we do a swing trade? And what's a swing trade? A swing trade is where we're saying, hey, we're going to place some type of trade. And when it gets back to where it was, either bullish or bearish, we're going to call it a day. And so could this continue to go up? Yes. But let's say you want to take your kids to Disneyland in April. And so you don't want to do a long-term trend trade. You want to make a little bit and you want to make it, buy it, take the money, and then run to California or run to Orlando or wherever. Maybe you want to go sit on a beach somewhere or, so if you wanted to do this as a swing trade, your target would be around this, this high was 326. 62, we could make the target 325. So if we wanted to edit this, we could just call that our swing target. And we can make this 325. Now, could we buy the stock? And what's the advantage of buying the stock? Well, the advantage of buying the stock is that, if it takes a little while to get there, you're okay. Like you don't have to worry about time decay like you do if you buy a call. Okay. So, this is an expensive stock. You may be saying, Barb, this is, we only have, how much money? We have, 17,000 available to us. Well, our rule says we can't invest more than 5,000 in any one position, but we're going to say, okay, we've got 5,000 we could invest, and this stock costs about $300. So you know what? We could buy, let's call it 15 shares. Okay, so we're going to buy 15 shares. And just because you can't buy 100 shares doesn't mean, it's not a valid trade. If it goes up and we make, let's call it 300 to make the math easy for my little brain, if we make $25 a share, 25 times 15, that's $375. In this class, we call that a base hit. That's a dent in a flight, right? I don't know what it costs to go to Disneyland these days, but, I'm just making stuff up, but it's, it's money. Now we could lose. So, this may not go according to plan. Has anyone else ever had a trade not go according to plan? Yeah, I've had a trade not go according to plan. So let's come to our trade tab. So does this on average trade 1 million shares a day? We're at 540, but this is a pretty expensive stock. And if we look at, I've not got volume on here. But I do believe this on average does trade more than 1 million shares a day. So let's just go with that. And we're looking at buying shares of the stock. We're not looking at an option on this. Okay. But where might we put a stop? Well, we might say, hey, it had this diagonal resistance breakout. We're expecting this level to hold. And so we might say, hey, around this, 287.40-ish level, if it were to pull back. And let's go 3% below that. So if we took our 287.40 times 0.97, that's 278. And so we're risking $22 a share, so we could end up losing around $300. But what's our max risk per trade? It's 500. So, there isn't a guarantee. If it gapped down, we could end up out at a lower price than that. And, when we've seen this stock gap up, we saw it gap down on earnings. So that's a possibility. But we've got a little bit of bandwidth. Okay. Yeah. Okay. So here we go. We're going to right click. We're buying custom with an OCO bracket. My default is 100 shares. Now we don't have 30,000 in this account, so it wouldn't let us buy 100 shares. We're going to buy 15. I'm going to click this firecracker, turn it into a paper clip, and then if I hit enter, it will make the quantities match. And so we're going to put in our target, and our target, I think it was 325, wasn't it? Yeah. So let's take that 325. And then our exit, 278. Oh, there it is, 278.78. Okay, confirm and send. Now, this is what I tend to do because sometimes being a human being, we can make mistakes. So this is 325, it's trading at 300. That's our target, right? Right. So, which is our base price plus 24.64, or if it goes down by 21. So it's close to a 1-to-1 risk reward ratio. Okay. And we're putting that in our stocks with target group. Fire in the hole. Now, if you have a small account, you could be looking at this and saying, but I don't have $5,000 I want to invest. Isn't there another way I could trade this? Well, this stock moves on average about $6.35 a day. That's the trading range from top to bottom over the last 14 days. Could we do a 1 ATR trade? Now, this is an expensive stock. And remember, when we looked at the options, there wasn't a lot of volume. And so, and also, this is $850. So, we have 173 contracts. So that does meet our requirements. Our bid-ask spread is only 20 cents. So that meets our requirement. But we could lose all of this, even though we may say, we're going to manage it and make sure we don't. The road to hell is paved with good intentions, my friends. So if you want to be conservative, you then say, well, where's the next contract that has volume that is less than $500 or less than $5 per share? And that would be out here at the 310. Now, what's the disadvantage of buying an out of the money option? Well, the probability of it being in the money is lower, but at expiration, but we're not planning to hold it to expiration. The idea, if we're doing a trade with a really short-term target, is that we just want it to go up enough to hit our target. And how much is enough? The amount that it goes up in an average day or has gone up over the last 14 days. And so, the probability of it going up or down that much within a shorter time frame is higher. We have a delta of 35, which means if this option goes up $1, the value of this of this option, it will go up by about 35 cents. If we look at this one, it will go up by 55 cents, but this is an option that costs twice as much at $8.50 versus $4. In fact, over twice as much. So from a percentage perspective, this is actually a higher return. And so out of the money options aren't always, a bad thing. And if we wanted to do that, how would we set it up? So this is our last trade for today. And I am going to change this to our scratch pad. Okay. And so this is a 1 ATR for Autodesk, where the average is, our ATR is 635. And our target is going to be the current price, which is $300.52 plus 635. So that is going to be 306.87. And our exit is going to be today's low, which I calculated ahead of time. So that was 297.01 minus 635. Now you may be asking, how did I figure out what today's high and low were? I came to the chart and I just hovered over the candle. And then if you look at the top, you'll see the high and the low for the day. Okay. And so that number was 290.66. Okay. Feel free to double check my math. Oh, this is 306. Typo. Okay. So trade, we are coming out to February 21st. We are looking to buy, and we're just going to buy a single. We're doing an OCO order. This is just another way of doing an OCO order on the Thinkorswim platform. We're creating an opposite order to get out when it hits our target. If it hits our target, and it may or may not. So that's 306.87, or if it comes down and hits our exit. Now this one requires daily management. So that's 290.66 is our exit. Hit save, confirm and send. And we're calling, this is a 1 ATR target. And exit, and we're going to compare it to the long stock position. Okay, and we're going to put this one in our long call group. Now, some of you may be saying, okay, you've talked about these trading plans. Where do I find them? Well, if you haven't subscribed to the channel, you'll want to do that. Make sure you do that. You're going to come to playlists, and then you're going to scroll down until you find trade management mini sessions. And when you click on the full playlist, the first one is on the power of compounding, but then the trading plans are all in blue, in this royal blue. And so here's a trading plan for the short put verticals. Here's a trading plan for long calls, an example trading plan for long calls with 1 ATR targets. Here's one for long call verticals. So there's 3 example trading plans. And if you wanted to see how to create that customized watch list or how to customize your charts, all these ones on turquoise are, you know, short and quick Thinkorswim tutorials. So you can do a little binge learning instead of a little bit of binge on your Netflix. So guys, that is a wrap for today. We didn't get to do our trade reviews. Yeah, I did one on customizing the option chain, I think. So you can change those columns, and that's pretty easy to do down here. Options chain. So 12 minutes. Okay, so if you'd hit the like button, it helps move this up in the algorithm so more people can find it. It also lets James and I know that you found this valuable. So please hit the like button. Subscribe to the channel if you haven't done that already. There is a survey in the chat. Here's the deal with the survey. 2 questions. And it's like from 1, I hated it, to 10, I loved it, and everything in between. You can also put comments in. So let me know, did you like the pace? Would you like to see more or less? What topics would you like me to cover in upcoming weeks? My promise to you is if you fill it out, I promise to read each and every comment, and so will our management team. So guys, that's a wrap for today. We did 4 example trades. And one of the comments that often comes up in the survey is, would you please review what trades we placed? And so, yeah, we hit our target on an Amazon trade. We'll review that one in Friday's Trading a Smaller Account. We did a long call vertical on Marvell. We did a short put vertical on AVGO. We did a stock trade with a target on Autodesk, and then an option, a long call with a 1 ATR target on Autodesk as well. So guys, have a really awesome rest of your day. Yeah, and I'll see you in a webcast coming up soon. Take care, everyone. Bye for now.